The Indian stock markets witnessed a significant sell-off on November 4th, with benchmark indices BSE Sensex and NSE Nifty experiencing sharp declines. The Sensex dropped over 1,200 points, while the Nifty fell by 1.52%, reflecting a bearish trend that follows a brief gain during the special Muhurat trading session on Friday. At 11:30 a.m., the Sensex was down by 1,329.34 points, trading at 78,394.78, while the Nifty declined by 442.15 points to 23,862.2. The fall in market value was driven by several global and domestic factors, creating a cautious sentiment among investors. Here's a closer look at the key factors influencing today's market downturn. 1. Us presidential election sensors are closely watching the upcoming U.S. presidential elections, creating uncertainty across global markets. Political outcomes in the U.S. can have significant impacts on global trade, foreign policy, and financial markets, leading investors to adopt a cautious stance. 2. Federal Reserve's rate decision. Federal Reserve is set to announce its decision on interest rates later this week. With inflationary pressure still a major concern, the possibility of another rate hike has created a ripple of anxiety among investors, leading to defensive trading. 3. Weak demand in FMCG sector. The FMCG fast-moving consumer goods sector is facing headwinds, with industry commentary highlighting a noticeable slowdown in demand across both rural and urban markets. Rising inflation, changes in consumer spending patterns, and supply chain constraints have contributed to subdued sales growth in this segment, affecting FMCG stocks.
4. Global economic concerns. Ongoing global economic uncertainties, including inflation, geopolitical tensions, and trade issues, have created a risk-averse environment among investors. These factors continue to put downward pressure on market sentiment, leading to sell-offs in several sectors. 5. Weakening rupee. Indian rupee has seen depreciation recently, adding pressure on equity markets as foreign investors weigh the impact of currency volatility on their investments. 6. Profit booking post-Muhurat trading. Following gains from the special Muhurat trading session, some investors are engaging in profit booking, especially in sectors that saw sharp rises. This has contributed to increased selling activity in today's session. 7. Sector-specific decline. As multiple sectors, including FMCG, banking, and real estate, have experienced declines as investors recalibrate their portfolios. The pressures on the FMCG sector, in particular, have contributed to an overall weak market outlook,